So today we're going to talk about thinking mistakes. That's the main section of the webinar today. And as you probably know, my name is Walter Peters, and we're here in the Naked Forex webinar. Now, what we typically do is we have some sort of bent on naked trading, and we will certainly look at the charts. And I'm happy to share with you the trades that I'm in and why I'm in those trades and how things are looking getting into the non-farm payroll here today, of course, later on. But for the moment, we're going to talk about trading psychology. Now, many of you know that I have a background in psychology, so I'm what you call an experimental psychologist by training. I don't really call myself a psychologist really anymore because I spend so much of my time thinking about trading. But I do have to admit that there is a lot of psychology in trading. And if you've been doing it for a while, you know exactly what I mean. A lot of people, when they hear me say, I talk about trading, they say, oh, well, you're not using your psychology anymore. And that's a big joke, right? We all know that there's a lot to do with psychology and trading. So what we're going to do right now is we're going to get into three, um, I call them errors or thinking traps that traders can get into, and what we can do to avoid them. And then the last bit of the webinar, I'm going to open up to your questions. I'm happy to have you ask me questions about the current markets, any charts that you're looking at or whatever. And of course, I'll also fire away I'll show you the trades that I'm in as well, so that you can see how I trade and which trades I'm in and why I'm in them and so forth. Okay, so let's get started. So one of the things that happens, and probably it's happened to you, I know it's happened to me, is that traders have a tendency to go through and look at the charts and then decide essentially you're sort of creating. Trading's a weird thing because we're essentially creating a system or an approach to the markets based on historical data, and then we're extrapolating that into the future. Now, a lot of people will tell you that the markets have changed or this and that, and this no longer works and that no longer works and so forth. And that's true. I mean, I can tell you, 12 years ago, it was quite easy to trade the non-farm payroll. And the reason why it was so easy was because you could put an order above the current price. I'm talking about right before the news release, right? So what we used to do, and specifically, I remember doing this back in 2003, that year, quite a bit, was we would actually straddle the market. So immediately before the non-farm payroll. So I'm just looking right here at the pound CAD 5-minute chart, right? And so what we would do is we would set a buy order above where the market is, and then the sell order below where the market is. And then once the news came out, so you do something like this. You put an order. Let's see, what's this at? So it's probably not a very good pair to do it because it's a little bit more volatile than you would, see with the euro or something. But essentially, you'd have it like this. You'd have a sell order down here, and you'd have a buy order up here, and then the news would come out, and it would go ping, and it would just clear your order, go right through it, and then you'd have your take profit, maybe some of it. You'd have your take profit, some of it you might let it ride, would be up here, and you could literally bag a good, 30, 40 pips, and it was like a no-brainer, And then that went away, and then traders said, oh, no, because what happened was the market would start, right before the news would come out, it would spike one way, and then it would go the other way, and it would, that sort of stuff, and there was a big hue and cry about what the brokers were doing and so forth and so on. And so that's an example of what I'm talking about here, which is where people say, this works, right? And then it stops working. And they say, well, the market changed. Now, I'm a big believer in trading systems where they're so simple that they're actually, you can hang your hat on the human behavior rather than the behavior of an indicator or a particular uh, volatility factor or a range or a pattern that sort of comes and goes in the market. So I like to do things that I like to rely on things that are actually based on human behavior, right? And that's why with naked trading, what we're looking at is these patterns are essentially human mistakes that are made in the markets, and we can see those quite clearly when we peel away the indicators. So the first thing I want to show you here is an example. By the way, is there a market that you guys would like me to use for this first example, number one, the first thinking mistake? If there is, please let me know, and I will use your example. I've got the pound CAD on here for no reason other than that's just an interesting pair to me at the moment. Pound CAD is fine. Okay, Ron. Cable. Minaj says cable. All right. Corel says pound CAD. Okay. All right, pound CAD it is. All right. So pound CAD here, you can see this is what happens. This is mistake number one. And I'm going to highlight a few here. Let me ask you guys a question. And this is going to be, what do you think about this candle right here? And then what do you think about this candle right here? Okay, I'm going to zoom in. So I've got this candle right here and this candle right there. And I'll make the first one as it has a green arrow. The second one, we'll give it a blue arrow, okay? So can you tell me what you think about this candle that's identified by the green arrow right here? Any comments, anything at all that you have to say about that? And there's no right answer. I'm just looking for observations, guys. I'm not looking for like reasons or whatever. I'm just saying, what do you notice about that candle right there that's identified with a green arrow? It's a good sell point, says Addy. Amit says exhaustion. Joe says shift of control from one group to the other. The Bears come into control, says Dirk. Minaj says there's a doji. Sandy says it's rejection of the support. Yeah. Okay, cool. Right. I mean, all of these things can be right? I mean, depending on how you see it. And also, what's interesting, and one of the reasons why I want to ask you guys to offer your opinions or an intelligent analysis of what's going on here is see how there's one thing in the market and so many different interpretations. And that's why I think sometimes traders get into trouble when they think that it's so obvious that this is what's going on. Well, no, it's not really. What's so obvious to you or I may be completely different to someone else, and it's why the same exact thing in the market can be viewed so differently by different traders. It's also a pin bar. Okay, so here's what this is. This right here is what, who said it's a pin bar? Sandy. Okay, so this is a pin bar, and 49er says the next candle opens above the closing of the candle. Yes, so there's like a gap here. So this was April 26, 2013, and the next one was April 29th. So that was a Friday candle, and then Monday the next week. And what's interesting about this is that the market fell, right? So it printed this pin bar, or whatever you want to call it, and the market fell all up about 290 pips, maybe 289, something like that, okay? After it printed that pin bar. Now, I'm going to ask you, what do you notice about the candle that's identified here with the blue arrow, right? What do you notice? Sandy says, "Is that what you call a kangaroo tail?" We're going to get to that in just a moment, Sandy. Um, you're very close to what I'm going to hit on in a minute. Um, so hold on to that thought. It's a support and resistance role reversal, says Ron. It's an exhaustion again, says Amit. Dirk says it hits the stop of the candle before reversing. Is it a hammer? False break of the prior candle low, says Minaj. Yeah, notice how we have all these are great observations. A lot of these are excellent observations. And notice how different traders are seeing the same exact thing, and they're giving it a different title, different name, whatever. Rejections, says Joe. Addie says it looks like it's the end of a reversal from the previous uptrend. Also a support level. Yeah. And look, obviously, if you trade support and resistance, you might draw something like this. Maybe it's here, maybe it's here, depending on how you view this over here on the far right edge of the chart. But essentially, you could say that what was once resistance became support or something like that. But the important thing now, guys, that I want to talk about is, well, what could we do based on just these two candles? What might we do? Could we come up? Do you think we could come up with a trading system based on these two patterns? Do you think you come up with an entry strategy? Let's not talk about exits for the moment. Let's just talk about an entry strategy based on this. Is that possible? Yes. Yes. Amit says yes. Ray says yes. Yeah. Yes, but how? Says Sandy Mike. Yeah. Okay. Here's what I'm going to propose. That yes, you could, just based on seeing this. Let's just say that we're a trader coming to the markets fresh. We see these two things, and we say, geez, after the market printed this exhaustion candle right here, where the green arrow is, it went down 289 pips. And then after it printed this bouncing candle right here, it went up approximately 380 pips. So there's something going on here. Maybe I could set up a system where after the market prints a pattern like this, I go for 150 pips or something like that. Now, here's what I'm going to talk. Here's this is the number one thinking problem that traders make, and it is essentially where you go back, you look at the charts, you come up with a system, right? And then, let me see if I got this right. No. Here we go. This should work. Okay, I'm hitting the F12 key on my MetaTrader, and what's happening is the market's advancing one candle at a time, right? So you can see on the far right edge, the market is starting to print more and more candles. So what I'm doing is I'm going to wait and see if I can find that exact same pattern that we saw over here. Now let's go ahead and describe it. It looks like what we had here was a fairly big candle that prints a bit of a wick, followed by a reversal candle. We'll call it a pin bar, essentially inside of the wick of that big candle, and then the market reverses, right? Here's another one. Here's the big candle, much bigger than some of the previous candles. It's got a sizable wick, and then nestled inside that sizable wick is a pin bar, right? And then the market reverses and goes after printing that sort of two candle pattern. So let's see if I can find this happening, if I can find this sort of thing again in my chart. That's a big candle, and then there's another similar candle, but it's kind of in the wrong direction, isn't it? And also the wick isn't long enough there. I'm just seeing if we can find this pattern. Now, for those of you that know how I trade, you probably know the answer, but essentially, when I see this kind of pattern, what would I say about it? Anyone who knows? What do you think I would say if I saw that pattern? Okay, here we go. So here's a similar sort of thing right here. Let's say that I saw, okay, well, I see this one right here. Here is the big candle, right? Certainly bigger than the last two candles, maybe last three. And nestled down there in the bottom of that wick is a pin bar or whatever, right? And then guess what happens? It goes up. It goes up. That wasn't really the answer that I wanted, but it did go up. I was kind of hoping it wouldn't do that. So what happens here is I can use this pattern that I've found to create a system. We all pretty much agree with that. But here's another one. Well, this candle isn't big enough. The reason why I wanted to show you that this example, these two examples, is because it's real easy to get sucked into a problem that a lot of traders have, and that is this problem of hindsight bias. If you've ever used an indicator that repaints, you know exactly what I mean. So just because the market threw up two of these for us right here in quick succession, and both of them were good winners, doesn't mean that this is a good entry strategy. In fact, I would argue that it's quite poor. I've done a lot of testing on candles that are a lot like this, and anyone who follows my trades or has read the book Naked Forex that I wrote or whatever, you know that I would categorically throw this signal out. I would say this is no good. It's not near enough good enough to take a trade on, and I'm not risking money on anything that looks remotely like this. And the reason why is probably beyond the scope of today's conversation, but essentially those aren't good kangaroo tails, right? They're quite poor, both of them. Now, the fact that they worked out is a bit seductive and means that maybe it will it will suck some traders into taking those trades. But I found that those type of signals are usually not very reliable. They're usually not good enough to risk money on. Likewise, this one right here. See this candle right here. Some people are going to see this candle and go, wow, it's a pin bar. Wahoo, let's go. And maybe it is, and maybe they are able to eke some money out of this. But for me, this does not fit in the special criteria of what is a kangaroo tail. And there's no way I would take that trade either. So the ones that I'm looking for are obviously those that stick out more, and what's this? That's interesting. And then have a lot of room to the left, have a lot of space, and that sort of thing. So that's actually a bad tick, is it? Yes, it is. Interesting. Okay, so I'm not interested in those. And if you can go back and look at older videos about kangaroo tails if you're interested in that sort of thing. But what I wanted to highlight here is how easy it is for a trader who just takes a look at this market here, sees this, and then not much later sees this, a month later sees this and decides, you know what, this is a great system. I'm going to trade this, because I can tell you from what I've seen, trading like this, that's not going to do very well for you. The kangaroo tails rules that I use, and that many other traders around the world, believe me, I hear from them, are very different to these, and I found them to be quite, much more reliable. Now, you can certainly go ahead and test this setup for yourself, but I'm guessing that it probably doesn't do quite very well, because I haven't tested this particular setup. What I've done is I've basically looked at failed kangaroo tails to find out what are the best ones, what are the top 15, 10% trades look like. And I can tell you that they don't look like this, right? But I haven't specifically gone out and tested this. I've just tested other setups that have some of these characteristics, but not this precise one. So just to be clear. All right, so the number one problem that we run into is hindsight bias. And this is really easy to do with indicators that repaint. You can go back and go, wow, it's such a perfect system. It calls all the turning points. I'm going to use it, and that sort of thing. Obviously, hindsight bias, we're actually kind of set up to use it. Politicians, economists, central banks, we're all quite good at using hindsight bias. It's essentially where you look back in time and you see something, and then with the bias of hindsight, you can look back and talk about reasons why things did what they did, and then you're prone to making errors in the future based on that. And this is certainly one of those right here, I would argue. All right. Let's talk about another one. How many traders here understand the best way to trade, or have been told, I should ask, the best way to trade? Has anyone told you the best way to trade? And if they have showed you or told you the best way to trade, what was that? And can you just quickly type that into the chat box? Flip a coin, says Amit. Yeah, I've used that one a few times. Maybe we'll do a webinar on that. You can actually make money on that. Supply and demand works for me. So what's the best way to trade? Or has anyone shown you the best way to trade or told you the best way to trade? The point that I'm trying to make here is that here's the truth. There is no best way to trade, right? So when people tell you that this is the best way to trade, you must trade the 1 hour charts and use this system, or you got to use this indicator, you got to use this, or even you've got to trade this market, right? Here's the truth. There is no one way to pull profits. And all you have to do, you don't have to go much further than the Market Wizards book to see this, that all of these guys who are doing quite well, actually I knew a trader who was invited to the Market Wizards book, and he said no, he didn't want to be in it. But he wanted to keep his anonymity, if I pronounce that the right way. Anonymity, yeah. There is no best way to pull profits from the market. There just isn't. Instead, there are a multitude of ways and methods, and you just have to find one that fits your personality. So if you hear a guru or a friend or a friend of a friend or somebody on a forum or whatever say that this is really, you've got to do this is the only way to do it, that's wrong. The best way to trade is the one that fits your belief about the markets, because, and here's why, because you'll stick with it. And that's key. So anytime you hear someone say, you've got to use the stochastic to trade, or you've got to use my system or whatever, this is the only way, anything else is less than this. I would argue that, and to be fair, I sometimes I'm trying to stay more open to different ways of trading. And some of my students will talk about where they take the stuff that they learn from me and they adapt it to their own. I love it when I hear that. I'm not one of those people that say, well, you're doing it wrong if you do that. What I'm here to do is to say, look, this is what I think is going to work for most people, something like this, but you've got to, it's really best, the best traders I know adapt it to fit their beliefs. So you might take the kangaroo tail rules that I use, charts, way to pull profits. If anyone tells you that, that's BS. And what you need to do, and this is by the way, this is a writer downer. This is one of those things that can save you years of grief, is if you can find what your bias is in the markets, what you believe about the markets. And this can be as simple as just writing down on one page. Just ask yourself, what do I believe about the markets, and what are the sorts of trades that I want to find in the markets, right? If you can write that down, what I believe about the markets, and the the type of trade that I'm trying to find in the markets, that I'm make profits in a way that you think is basically the best way to do it, and you will stick with that for the long haul, because most traders don't do that. Most traders find a system, trade it for a little while, give up, find another one, trade it for a little while, something happens, they give up, whether it's a drawdown or a bad day or whatever, or they find something shinier and newer and better, and then they trade that for a while and they give up. That's the normal sort of course of events for most traders. They're going to have the And if you don't trade what you believe, you're going to be trading something else sooner or later. So there is no one way to pull profits, but I think it's really important that you identify what your beliefs are so that you can trade them, because we all do in the end. We all trade our beliefs in the end. There's no way around it. All right. Yes, Ray. Ray says, can you show us later what your trade system is and how you typically trade it? Of course, Ray. That's what we're here for in the last half of the webinar, which is quickly approaching, Ray. I'll show you my trades, and I'll show you exactly why I'm in them, okay? Number 3 on the list is, let me ask you guys to write down in the chat box there some of your thoughts about reward to risk ratio, okay? Go ahead and just write down some of your thoughts about the reward to risk ratio. What are some of your thoughts? Anything. Just go ahead and fire away. So it's important to use it for money management. What else about the reward to risk ratio? How do you use the reward to risk ratio in your trading? Do you have a certain rule that you apply? Amit says, I try for 2 to 1, but if it's strong trends, then I go 3 to 1 or 4 to 1. Ray says, yes, 1 to 2.5. There you go. I'm going to, anyone else willing to share some of their thoughts on the reward to risk ratio? I'm not going to call you out and say that, you're wrong or whatever. So don't worry about that. I just want to get some of your thoughts and see what what you guys are dealing with. Adi says, sometimes a high risk to reward is a killer for me because the trend reverses. Right. Yes. I think you guys are kind of lining up with. Okay, here's another one. Carell, the idea that it must always be over 1 is overrated. Some setups can be so good the ratio can be smaller and still profitable. Bingo. Okay, this is what I was wondering if anyone would hit this. Deviant says a lower reward risk ratio equals higher win rate. Of course, yeah. So Carell and Deviant are sort of stealing my thunder. So this is what I want to talk about. This is a big mistake. Big mistake. Now, I know, there's a caveat here. Now, I want to be clear. We all know that it's much easier for you to win or make money if you're trading a system that has a high reward to risk ratio. In other words, if you're going for $30 every time you risk $10, or if you're going for 40 euros every time you risk 10 euros, you're probably, I want to phrase this the right way, you know that you don't have to win very often to make money, right? That's just simple math, right? If I win 20% of the time, right? And so let's say that I win 30% of the time. If I win 30% of the time and I'm making $40 every time I take a trade, that's a winner. So we'll go ahead and type this out. So if I win 30% of the time and I win $40, then over the course of 100 trades, right? What am I going to make? If I take 100 trades, how many winners am I going to have? 30, right? So I'm going to win $1,200. Those are my winners. Now what about my losers? Now, if I have a 70% loser rate, right? So 70% of my trades are losers, then I know that I'm going to lose $10 every time I have a loser. I'm going to lose $700. So I'm going to make $500, right? Because my losers are negative 700, my winners are plus 1,200. So I end up with $500 off of 100 trades if everything goes according to plan. Now, you're going to read about how important it is to have a high reward risk ratio in trading books and things like that. And it's kind of like the 2% rule or the 1% rule. You should only risk 2% of your account and so forth. It's just kind of, it's almost like passed down because it's tradition or something in trading. And here's the nitty gritty truth about this. I'm not saying that you shouldn't have a high reward risk ratio. That's not what I'm saying. But this is a little bit controversial when I get into this topic. What I'm saying is that a high reward risk ratio can be a mistake. It can ruin your psyche. It can be a big mistake. And I see this made all the time by traders who want to win. Now, I have a friend. He's in Toronto, and he trades 4-to-1. He trades a system that's 4-to-1. I think his win rate's around 33%, 34%. And so that means obviously 67% of the time he's losing. But because he trades $4, trades to make $4 for every $1 he risks, he's making money doing it. Now, here's what I have to say about that. Most people can't do what he does. Most traders I know want to win. They want to have a high win rate. They can't stand having several losers in a row. It makes them change their system. It makes them abandon their system. All these things happen when they start trading a system that has a low win rate. And most traders are that way. Make no mistake. I've tested hundreds and hundreds of traders, and most traders that I test want to win. They don't want to have a high reward risk ratio. I mean, they want to have one, but it's a trade-off, right? As who said this? Deviant, yeah. A lower reward risk ratio is a higher win rate. So if you bring down the reward risk ratio, if it's at 1.3 to 1, so you're making $1.30 for every dollar at risk, you can trade a system that has a high win rate, like a 70% win rate, right? Obviously, you're going to make money, and you may not make as much money as the guy who has a 40% win rate, but psychologically, you're able to keep trading that system. You feel good about trading it, you enjoy trading it, and you don't give up on trading it. And that, to me, is a much more important outcome than making sure that you make $3 for every dollar at risk. Okay, so this is a really big mistake, guys. A lot of traders make this mistake. It happens all of the time. People, so they think that they're doing the right thing by moving their target really far, and then their win rate starts to drop, and then they give up on the system and they look for something better, right? So it's one of those things that kind of gets you stuck in that cycle of doom, I call, where you're always looking for a new system. You find a system, it's the greatest thing in the world, you start trading it, this is awesome, boom, something happens. You start thinking, oh, maybe this isn't so good, I'll have to find something better. Or you find something better, and then you jump into that. This is the greatest system in the world. It goes well for a while, then boom, something happens. Oh no, I better find something better, and so forth. And we've all been in that cycle, right? You know what that is about. Believe me, I know. Believe me, I've done it for years, so I know how that feels, and it's no fun being stuck in that cycle. But a couple of things make it easy for you to get in that cycle, and the reward risk ratio is high on that list. By mindlessly following the mantra of having a high reward risk ratio, you can often basically paint yourself into a corner, and you might end up giving up on a pretty good entry strategy because you've tacked on a high reward risk ratio to it. So just wanted to throw that out there as well, so you've got that. All right. Yeah, exactly. Yeah, you guys are on the ball. Some really good comments here about expectancy curve and drawdowns. All right, so let's keep going. I want to fire away my show you my stuff, where my trades are. So I was looking at taking a buy order on the pound cat on this weekly kangaroo tail. You can see, so basically, if you haven't seen my charts before, I'll decode them for you. If it's a blue number, that's the entry price. You can see that the entry price was 10 pips above the high this week, which so far was 1.8912. 1.8912. So it was 10 pips above that. It's never been triggered, right? And going into the non-farm payroll, it's not going to be triggered because I've removed my order. So this isn't going to happen. Stop loss was down here, and I had target 1 and target 2 up here. So that was a trade that did not trigger. The pound Swiss, however, this is a trade that did trigger, and the stop loss on the pound Swiss trade is actually at plus 10 pips. So the stop loss is at 47.50. It used to be up here above this kangaroo tail right here. Now this is much more in line with a kangaroo tail that I like to trade, obviously, versus those ones that we saw before. This one's got room to the left. You can extend a lot of this tail to the left. Now, of course, we're going to hit this big Franco-Geddon candle here, but this is the kind of move that I like to see as a peak, as a retracement. This trade is actually it's already hit 42.10. It went as low as 41.87, so it hit target 1. I'm still waiting on target 2 and target 3. So this is a simple retracement of a big bearish candle with a kangaroo tail that basically told me that it was ready to go, right? And it was right off of this resistance level right here where all these lows are. So that's the pound Swiss trade that I'm in. The New Zealand Swiss trade is interesting. This was sold at 73.50. The stop loss is now at 73.40, and you can see the most important thing to me about this trade, and I know this is a lot of recap for those that follow my trades, but the main thing about this one was I wanted to see the market break and close below this 72.40 level, which it has. It's traded as low as 71.59, so it hasn't hit target 2, which was 71.50. Maybe we'll see that happen today, but the stop loss has been moved to 73.40, so this is in fact a break-even result as well. If worst case scenario, if the market rockets back up here, it'll hit my plus 10 stop on that one. All right, the CAD Swiss. This is interesting. This trade here was triggered last week. It's kind of similar to the pound Swiss, where the market retraced the Franco-Geddon candle and then it hit resistance right here where this low was, and it started to turn around. It's not really a pattern. I actually trade this, believe it or not, and for those of you that are new, you probably never see anything like this. And so I'm sorry, cover your eyes. But this is basically off the line chart. And I know that sounds silly, but and some of you obviously know all about this trade. But meanwhile, everyone else who's trading like Heiken Aishi and whatever, all these indicators, I'm trading. I don't know why I think that's funny. I'm trading the line chart. I just think it's hilarious because it's so simple, but it works bloody brilliant. So this trade was triggered, right? It's actually in a slight drawdown. It's a weekly chart trade, though, on the CAD Swiss. And so I'm kind of just sitting here. It's in a holding pattern. The stop loss is up here. So this is the one that has the most risk for me. The stop loss is up at 79. So this one still has risk on the tail, which is a little bit unfortunate. But with weekly trades, They have a lot more wiggle room in terms of stop loss, so it's really not that bad to have a weekly trade open during the non-farm payroll. In fact, it's really hard not to have a weekly trade open during the non-farm payroll. The only thing is it doesn't it's not nice to have them open right when the non-farm payroll, goes. And this is a fresh one. I've only been in it a little less than a week. Here is the euro yen. This was similar to that CAD Swiss, in fact, where the market came up here, and it was a trade where I sold at 133.37. My stop loss is at 133.30. It hit target 1 at 131.10, and it just barely missed target 2, by about 20 pips, which isn't much on a weekly chart. And now we're in a holding pattern. So it's either going to come up and hit 133.30 and basically stop me out at plus 7 pips, or it's going to finally move its way back down here to 126.70 and take me out down there and hit target 2. And I think I already mentioned the pound CAD, right? Yeah, so that one's not gonna go this week. So those are my trades. I'm happy to open it up to yours. If you have any trades that you would like to take a look at, or any markets from a sort of a naked point of view, fire away. So I'm in the euro. Oh, the other one I should mention is that the gold trade I took, this was a bit sad. So this was a sell over here at 12.27, and the stop loss has moved to 12.20 plus $7. It actually hit target 1 at 11.77, and it missed target 2 by less than $1. That was such a bummer, because then it came back up and hit right here. But I'm looking at possibly shorting again. I'm not sure that it's quite there yet, but that's another one. All right, so Amit, I generally trade daily and weekly charts. I do sometimes go in with the 4-hour and very occasionally on the 1-hour charts, but the lion's share of my trades are weekly and daily. And the reason, and some people will tell you that they don't have an account big enough to do that. That's not an excuse. You can move to a broker that will allow you to trade for less than micro lots. And those brokers allow you to, so essentially it doesn't matter if you have a 300 euro account, you can still trade weekly charts and trade them quite well if you have a broker that allows you to set your own lot sizes so that you don't have to trade their predetermined lot sizes, right? Because if you do that on a small account, we all know what will happen if you have, if you're trading a weekly chart trade and you have to decide between risking 5% of your account or nothing, that can be a little bit deadly. The pound is a mess. Who wanted the pound? Violetta, I hate to say it, but the reason, by the way, the reason I like the weekly and the daily charts, Amit, is because most traders I know have jobs. Some of them have wiggled their way out of their jobs, but most traders I know have jobs, and it's really, really easy to manage the daily and weekly charts from if you have a job. Also, I don't like sitting in front of the computer, so I really like managing my trades. Basically, twice a day I look at them, and those of you that follow my trades know that. So yeah, so the pound, Violetta, is a bit of a mess. If I had to guess, and I'm not going to guess here, but if someone put a gun to my head and said, "Where's it going?" I'd say it's probably going down. But who knows, right? When you see the market trading in an area for a long time like this, where it's candle up, candle down, that's kind of like a market of people losing money. Maybe some of the guys on the lower time frames in the 5-minute charts who are going cross-eyed, maybe they're making money, but the daily chart traders certainly aren't. So this is a really, it's going to break out obviously here. I think it's going to break out to the downside. I'd have to guess it probably will, but who knows, right? Who knows? Any other ones, guys? Any other charts that you want to have a look at while we're here for a few more minutes? All right, it looks like we've got the pound. Pound New Zealand. Amit, pound New Zealand. Cool. I think that one's over here. This one I've been following. It's not really. See, the pound New Zealand's on this support level right here, so it basically needs to make a decision. Is it going to sit on this level, or is it going to fall back down? I'd say it looks like it wants to fall back down and possibly come down to where this low was, or ideally actually down at this level down here. But I think the critical piece for this is actually seeing it close below, say, this open right here. So what's the open on this one? If it closes below 96.80, 1.9680, then I would probably be comfortable taking like a 4-hour entry on that one on a pullback. But I'm not sure that it's really broken through this support level, so I don't know about the pound New Zealand. That's a real tricky one. Who else? The euro, says Ray. Yeah, really, really interesting. I thought this was headed for a double bottom down here, or not a double bottom, but at least pausing down here, maybe double bottoming, or maybe going lower. But for the euro, I would like to sell it here at 111.50. That would be kind of my, brilliant sort of best case scenario, is for it to get up there and then print a bearish candle. That's where I'd like to sell the euro. Alternatively, if it does move down to 105, we might see a breakout pattern as well. And we could trade it when it broke out of 105 and then came back up and touched it, and then we would sell it. Break out and then a retouch. That would be another way to do that one. But that's kind of my thought on that one. At least it's not as ugly as the pound, I guess. New Zealand yen super long-term monthly. Oh, cool. Who said that? Deviant. Oh, awesome. I'd love to take a look at a monthly chart. Let's go with the daily one, and we'll turn that into a monthly if possible. Let's see. So, which candle is it? I can't see it. Is it a sell? I don't have quarterly on here. Yeah, I don't see it, guys. I don't know what this is. Is it a busted kangaroo tail or something? Can't go to quarterly. It looks like it could be a busted kangaroo tail, like you could trade that. But for this one, I'd want to see it close below 85.60, 85.60. That would be pretty good for a sell on that one. That one to me is not quite there. Euro pound, real quickly, guys, real quickly. I know we're running. Or Euro pound looks like it's ready for a double top right here. Kind of looks like gold, actually, the Euro pound. So if it prints an exhaustion candle around 73.80, that would be where I'd want to take that one. The Euro New Zealand. Okay. Sorry, I thought we'd have a little bit more time at the end here. Euro New Zealand. Usually when you see this, it's tricky. This could be the start of an up move to 1.50. But it also could be, this is just a downtrend and it's kind of just retracing, and you're going to see a massive red candle come, kind of like this one, and that would tell you that it's backed off to the races where it starts selling off again. And there's another potential spot right here, right? You could see it hit 1.48 and fail there. But this looks like a market that's tentatively moving up and it's going to fail. The key on that one is going to be a big red candle. You get a big red candle around 1.48, I think that would be a brilliant sell on that one. As for the mess that is the yen, yeah, that's a mess. So I've got the yen in this big green box here, and I'm waiting for it to break out. If it can break out of this box, then I would look for a bounce off of the box. So if it went higher, came back down, touched the edge of the box, and printed a bullish candle at 120.60, that would be enough for me to take a buy trade. Yeah, that's tricky, isn't it? Very, very tricky. And I don't have the New Zealand pound on here. Sorry. Don't have that one, if that's what you mean, the New Zealand pound. Yeah, Aussie Kiwi at a 10-year low. I think you're going to see a lot of Aussie pairs make 10-year lows, actually. So what you do on those is you can do fib extensions around numbers or things like that. What I would love to see on this pair, and we might actually get this, believe it or not. I know it doesn't look like it now. I'd love to see the pair come up to this level right here at 102.90 and print a bearish candle. Boy, would that be a lovely sell. Because see, now we've already got this, let's say this ends up being the low or somewhere around here. We've got a really nice clean move all the way down to 101, see? So that would be brilliant. But we'll see if it happens. Thanks, Bravo. Okay, Amit, I'm glad that we looked at the pound New Zealand. Cool. Yeah, we did. Great. All right, guys, I really appreciate your time. I hope you have a wonderful trading week. Thanks so much for spending time here. Hope to see you at the next Naked Forex webinar. And until then, I wish you very happy trading. Thanks, guys. See ya. I'm glad it was a good one, 49er. Thanks, Hanga. See you, Dirk. Take care. Bye, Joe. Bye, Alex. See ya, Meet. See ya, Anga. Bye, Barat. See you, Carlos. See you, Dirk. See you, Federico. Bye, Jim. Take care, Pep. See you, Ron. Bye, Sylvester. Bye, Violetta. Thanks again, Karel. Bye, Manny. Take care, Carlos. Bye. See you guys.